Thanks for
Thank you, Srini, for doing this session.
so thanks everybody for joining on Saturday afternoon. I know everybody will have some things going on, and taking time to join on Saturday is always challenging. So today, in the past, I have given sessions on mostly around options trading and some of the stock trading ideas. So today the topic is a little different. So today's topic is going to how can we take advantage of higher interest rates that are currently prevailing, right? So most of you know the Fed has been increasing the interest rates. So which means we can actually take advantage of earning interest on our savings. So I will go through some of the ideas I have been doing for the last few months. In the end, we'll open up for questions. Okay. So first thing, the disclaimer. So this is not an investment advice. And this is for informational purposes only. Like most of the things I'm going to talk today are my experiences. I'll walk you through some of the websites and other things. Everything is for education purpose only. So whatever investments you're going to do, it's up to you. So you can just use this as information to help guide you in that process. All right, so let's so hopefully today it will be a short presentation. I'm hoping we can wrap this up within 20 to 30 minutes. So cash sorting. So what is it, right? So banks don't want us to do, right? So if you check your checkings or savings account today, right? If you have checkings or savings account on one of the bigger banks that have brick and mortar places, so you will see that they hardly pay any interest. Like maybe even in your savings, they might pay like 0.1, 0.2. At the most, I have seen like 0.49. The best banks I have seen, right? Unless you have very big balance, usually above 100K or above million, right? They will recommend you to move to a higher interest paying the savings account, right? So even then, you might be better off actually putting it in different places where you can earn more interest compared to some of the bigger banks. And so banks actually make money using your checkings or saving by investing into short-term bonds like T-bills, right? So they make all the interest over there and they don't pay much to you, right? That's how they actually make a lot of money, right? So that's why they don't recommend anything to you. Like it's up to you to reach out to them and ask them if they have any high interest paying accounts, right? So that they can enable that on your savings account or create a new savings account so that you can move there, right? So I'm sure in the recent days, you must have heard this term cash sorting, right? So this cash sorting is just a term that it's a financial term that people refer to when people like us move the money from the banks in our checkings on the savings account to other places where we can earn more on that money, right? So it could be to the other banks, or it could be into the bonds, or it could be into stocks and other places. So some of the banks got hit lately, like Bank of America, and Bank of America is not much, but Charles Schwab and others, their stock went down because of the same reason, right? And there is other term you must have heard about, what is called a bank run. That's little different. It could be part of the cash sorting as well. In case of bank run, people are just taking away the money from that bank because they are not comfortable putting the money in that bank for risk reasons, right? Which is what happened with SVB. Okay. So let's go to the next one. Okay. So here are some of the ideas I have done with my balances I have in my checkings and savings account, right? So first thing is to check what's the interest rates paid on your checkings and savings accounts, right? So even if it is 10,000, 5,000, it doesn't matter, right? I would highly recommend checking it, because most of the big banks in the checking account, they don't pay, or they pay like 0.1%, right? Even in the savings account. Okay. So given that interest rates are close to 4.5, 4.75%, so think about it. If you have $10,000 sitting there, right? If you had that money in some of the higher interest paying accounts, even at 4%, you'll be making $400 a year, right? So we're pretty much leaving the money on the table. Okay. So first thing I would do is call your bank, check your bank to see if they have higher interest paying savings accounts, or convert one of your accounts into higher savings account, right? Ask for what is the interest rate they're paying, right? And some of these bigger banks, they say the minimum, you have to always maintain the minimum balance to get that interest rate. Check that. So there are a lot of banks, online banks, like Ally, Sophie, Marcus, right? So they actually pay higher interest rates, and they hardly have balance requirements. So personally, I use Ally Bank. I know there are like the Sophie bank actually pays a little more than the Ally, but kind of been using Ally for quite a bit now. So that's why I usually just put a automatic transfer every month. As soon as my paycheck falls into my account, right? I'll just give it a few days, and I leave little balance in my the regular the big bank account, but automatically I transfer some of the amount into my Ally Bank. So I have a link here. You can even Google for the best high yield savings accounts. You'll get a lot of the references, right? So you can go in there and check. So let me go here. So I'll show you. So I would Google and do some research, whichever bank you are comfortable. So you can look into taking advantage of higher interest rates they pay. Right, they're the Lending Club, UFB, Marcus by Goldman Sachs, Ally, Security Bank. So you can see a lot of banks here. You can check what their interest rates are, like 4.5, 3.4, even Capital is paying 3.4. So just check those. So the one I'm using is the Ally one. So you can actually go. So every bank publishes all these rates. Right, if you go into savings, so you can see they're paying 3.75 now. Okay, so that's that. So let's move on to the next idea. Okay, so I know a lot of you guys actually do a lot of trading. So is there another thing that I highly recommend checking? Check with your brokerage. Go to your brokerage pages or Google, say if you're with the Interactive Brokers or Ameritrade or Charles Schwab, right? So check the interest rates for uninvested cash balances, meaning how much interest they pay, right? So some may not pay much at all. They may not even pay anything at all. So just check, right? And also check the margin rates, meaning if you often use margins, so check their margin rates as well. Okay. And some of the banks actually, some of the brokerages actually offer money market accounts, which pay, it's almost like a savings, but it's a little different. They invest into short-term T-bills, all of it, all the money you have, right? but they are very liquid. You can move it at any time. So they offer better interest rates. Some of the brokerages would automatically move your money into what are the cash that is left. You have to enable it, but once you enable it, they'll automatically move it to your MMA account so that you get better interest rates, right? So just to be careful, just understand between money market accounts and the funds. Funds are more like managed funds. Which are not insured, but they're also relatively safe. But I would put into money market accounts rather than money market funds, right? So as I said, yeah, so these brokerages offer auto sweep of the cash balances to money market accounts so that your money, your cash that is sitting idle is making money for you, right? And some banks also offer money market accounts. I actually use Ally Bank for my money market account. So when I have both money market account as well as a savings account with Ally. Um, if you see, money market has a little bit more interest now. It used to be like close to 4.5 a few weeks back, but recently the bond rates have fallen down a little bit. That's why you see a little bit of low interest. So even then it's 4%, right? So here you can see it's a 4% versus savings is 3.75, not much, but I kind of evenly split between these two. And both are FDIC insured up to 250K. So that's other thing you need to be aware of. Like if you're going over to 50K, then it's not that it's going to happen. It's not that the banks are going to fail or anything. But just think about it with the recent SVB turmoil we went through, right? So you may want to think about if you're crossing that limits, how you want to manage your risk, depending on your individual situation. Okay. So yeah, and again, all these the brokers, they publish their interest rates. So personally, I like interactive brokers because of their low rate. Like for example, margin interest rate, right? How much they charge when we borrow money from them. You can see that interactive brokers is the least when compared to a lot of other the brokers, right? So they do pretty much, I think it's like 1.5% above the base margin rates they have. So just do that comparison. Similarly, if you actually look at the interest rates they pay meaning if you just leave the money in those brokerages. I know this one is actually a table from the Interactive Brokers website. It might be a little outdated, but I think it's pretty close to accurate. So Interactive Brokers actually pays closer to T-bill rates. They only take, I think, a 50 basis point, 0.5 less than the T-bill. So even like if you're in Interactive Brokers, any uninvested cash, you're still making interest. So I would definitely consider looking into which brokerages are better if you have a lot of cash is ideal most of the time. Okay. So let's move on to the last option, last chart. I would say there are a lot of other more options. So I have been also doing lately T-bills. I did I-bonds last year. I didn't do the latest I-bond updated with the updated interest rates. So T-bills and I-bonds. So the banks pretty much when your savings that you have in the banks, right? Even all these Ally Bank, money market funds. So they're actually under the covers trading treasury bills or treasury notes and bonds. So you can actually directly buy these either from your bank or broker, or you can actually directly buy them on the Treasury Direct Gov. So I actually directly buy from treasurydirect.gov, meaning it's from the US government. It's almost like think of it as you're giving loan to your government, right? They're selling the bonds, you're buying those bonds, and then they pay back the interest, right? So lately I have been doing treasury bills. So before I go there, let me go to the website. I'll show you. So if you go to treasury.gov. You can actually register with your SSN, everything, and you can link your bank account. And then you can start trading T-bill, treasury bills, all that directly from the US government. So I've been doing the treasury bills in the started doing it 2 months back, because now that interest rates are at 4.5, 4.75, you saw that the Ally Bank is only paying like 4%, right? Because usually the banks keep 50 basis points and they only pay you the remaining to you, because they need to make money as well, right? So with the treasury bills, you're directly buying from the government, so you get paid whatever the bill rates are, right? So these are, I usually only do the short-term ones, like 4-week, 8-week, 13 weeks. I call it as so this is often referred to as a T-bill ladder, meaning, so for example, if you have, say, 75K, right, in your savings, so you can go to the Treasury Direct Go, register there, and you can buy like 4-week, 8-week, and 13-week, like split it into three, like 25K, 25K, 25K. Once the 4K one matures, you can actually roll that into 13-week again. So similarly, after you get to the 8 weeks, you can roll it into 13 weeks so that you're continuously rolling, right? At any given point, I'm only tied up for 3 months, meaning 13 weeks. Okay. So let me quickly show you guys. So once you log in, you can actually see that you can go to the buy direct, right? It's my account. I already logged in here. So you can go to the T-bill, like buy the bills. That's a T-bills, treasury notes, bonds, tips, foreign, right? Or the other types. Okay, so if you look at the latest, so these T-bills, right? They actually go auction almost every 2 to 3 weeks, right? So you can see that issue date almost every week, I would say, right? So so issue date for 4/4 next week, right? The interest rate, it already happened. The auction already happened. You see that the rate is 4.6, right? And the 8-week one is 4.7, 17-week is 4.98. So if you are okay holding it for 17 weeks and you don't need the money, right? You can actually see that you're getting a little bit more money. But T-bills are usually, I think at most like 52-week, 1 year. So you can decide based on your financial condition so that your money is making you a little bit more money than the actual savings accounts. So where the T-bills work is, so say if you're buying $100 bond, right? The face value of each is like $100. So it's not like they're going to pay you interest every month or things like that. So when actually auction happens, you're actually getting it at a discount based on that the rate. So in this case, 4% means on a yearly, assuming this is a 1 year, 52-year. Let's look at the 50. It's easier, right? 52-year one is like 4.6%, right? So which means you're actually buying it for $95.40, close to something like that, right? And then when it matures, you're going to get back the $100. So that's how the T-bills work. Little different from like notes and bonds where they pay you quarterly dividend every quarter or 6 months. I think it's every 6 months they pay you the dividend. You need to check when they pay. So you can actually buy all those bonds here, or you can buy it from brokerage. Your brokerage, they might have some charges for the transaction. I have never done with my broker. I'm always been doing directly from the from the Treasury Direct. So other thing to look at is iSavings bonds. So I'm sure every one of you are aware of the interest rates going up, the inflation going up, right? So lately inflation is high. So these bonds are inflation adjusted bonds. So these interest rates vary based on the interest rates. Last year, they were paying almost 9% till November. They get adjusted, I think, every year twice, I think May and November. They got adjusted the November last year to 6 point something. Let me go there. So this is something you can actually buy there as well. I can see the rates here. So right now it's 6.89. So from November 20 to April 30th, right? Again on the May 1st, because May is coming up pretty soon. I think we may want to wait to see what that rate is going to. It might go down again a little bit, but I think it's still be above 5% based on current rates or right next 6 months. So only catch with the I bonds is you after minimally, I think you should hold for 1 year, right? After that, if you close the bond, sell the bonds, you can sell it directly here, Treasury Direct itself, close it. You have to pay interest penalty the last 3 months if you sell it before 5 years. But even then, I think it's just the last 3 months interest. But overall, you will still be above whatever the interest you get from T-bills. So this one, and there is also a limitation with I bonds that you can only buy 10K per year per SSN. So in my case, I bought under my SSN, and you can also actually link your kids in the same account, even though they're minors, and you can buy under their name as well. So I bought under my name and my kid's name as well, right? So that I invested 30K, and then also I opened an account for my wife, and I got the 10K under my wife as well last year. Yeah, so other types, yeah, as I mentioned, treasury notes and bond. I don't actually trade these. You can always Google and find more information. It's about these other options out there. So that's all I have. Let's go ahead and open up for Q&A, or if others have other ideas how you can earn more on your savings. So we can actually brainstorm.
Yeah, thank you, Srini, for doing this. Definitely, I learned something new. Before I go through the questions that are put in the chart, so any downside of it? Is it like at the end of the day, instead of putting our money in a bank or in a savings account, we are trying to put it at a different source, which in this case, treasury bills or T-bills. Again, this is completely new to me. I'm learning, so I'm grateful. So any downside to it, like your money cannot evaporate according to markets or anything as such, right?
Yeah. So the risk with the treasury bills is U.S. government, right? U.S. government going bankrupt.
Okay.
Meaning, almost think of it like you're giving U.S. is selling the debt, meaning they're raising money for whatnot, right? For all the government programs and in the government and everything. So if U.S. government goes bankrupt, yeah, that's a risk, right? If that happens, forget about like all the stock market. Stock market will melt down.
Right. Okay. Yeah. Thank you, Srini. So I think I'll go through the questions. Feel free to answer, and then I also liked your point of brainstorming and sharing views. Definitely more intellectuals might have joined today. We'll see how that goes at the end as well. So the first question we have is T-bills and I bonds different?
Yeah, so they're completely different. Like I said, T-bills or treasury bills, those are auction that happens every week, almost, right? For almost all the expiries. And it's almost like an auction. So based on that day's auction, right? Interest rates, so kind of they start with some base interest rate. It will, based on the auction, it might go up or down, right? So they're very short term in the sense up to 1 year, and so when you buy it, you are already getting a discount rate, right? And then at the maturity, you're getting back your money, right? It's like more like a debt, and it's not tied to inflation at all, right? But the I bonds, I saving bonds that I'm referring to here, they are more inflation related. So till before last year, end of 2021, inflation was 2020, before 2022, right? Till 2021, inflation was very low, right? If you had bought those bonds, the interest rates were like it was close to like 1% or 1.5%. Nobody was investing in the I bonds because inflation was low, right? Since the inflation shot up, the rates for the I bonds went up because they are inflation protected I bonds, meaning if the inflation goes up, they pay more interest, right? So again, like say next year the interest goes down, I'm going to pull out my money, right? Even though I'll take the last 3 months, but even then I'll be making more interest than what I get in other places.
Okay, that makes sense. The next question is, can we take T-bills on the auction date itself, or we can buy anytime?
Yeah, so it's not really on the auction date. So when you go to the Treasury Direct, you can just say buy in the next auction. Maybe see if I can actually do that here. So that way you're almost doing like, say, I can say bills, right? Submit. Okay, I guess I'm already logged out. Anyways, so yeah, you don't need to buy on the auction date. You can actually just decide, the Treasury Direct actually gives, I want to participate in the next auction. And you just say, okay, I want to buy there, right? And you just, once your account is linked, how much amount that you want to buy in the next auction, you'll automatically execute it for you. It will be close to any of that base interest rates that they have anyways. You don't need to worry about that interest rate is going to be too low. But again, these are short term. So even if it get a little less than what you're expecting, it should be okay. That's why I'm doing a short term T-bills there, because this rate is going to impact how much banks are going to pay you as well, most of the times.
Okay. Can we buy T-bills in IRA account?
I think so. I can get back on that. We need to check. I think whoever is asking, just Google.
Yeah. And one other thing, let's say IRA is opened with one or the other firm or brokerage. So even
Yeah,
their customers
brokerages
should.
also provide, so you can actually buy it there in the secondary market. Yes, yeah.
Okay. Any limit on treasury bills?
No, there is no limit as far as I know.
Okay.
But for the I bonds, there is a limit of 10K per SSN.
Yeah, which you talked earlier, how to, increase it based on kids. So one question that when you explained I got was, I know you said you opened an account for your wife as well.
Yeah, that's a
Since you
separate
tied up,
account.
yeah,
Yeah.
since you tied up your kids here, they cannot do on the other side, correct? Or can we do
Yeah,
30K for
no,
them as well?
you cannot. They ask for your SSN, so
Oh, okay.
it's pretty much it's your almost like it's tied to IRS and everything. So yeah.
Yeah, at one place somewhere we have to do that's all. Okay, the next question we have is there any tax exemption for T-bills or I-bonds?
It's a good question. Let's just Google, right? I bonds, I know there is a federal tax. Think yeah, so pretty much most of these bills are subject to federal income, but not the state or local, right?
Okay, so can I move to the next one, Srini?
Yeah, let's go. Yeah.
Okay. So one question is, missed few minutes, do we get recording link? Yes, you do. It's always will be available whenever it's ready on Things Have Your YouTube channel, and also links are shared by TS admins. You can go through that also. But at least let's say chart is too much to follow, Things Have Your YouTube channel is present. You can just subscribe there. You'll get all the videos. Not only this, any informative session Srinivas Hasti does, or any technical sessions Vishwa does, or any of the other Things Habians and knowledge sessions about the website, and introduction sessions that are done to any new joinees, everything will be available on the channel. That way, you are equipping a lot of knowledge over time. That's one place to look at.
Right.
So the next question, yeah, go ahead.
Yeah, so I just want to mention one more thing with the T-bill. I think it's related to that auction date thing. So you can also set it to automatically buy the next auction. For example, so you decided I only want to do 4-week auctions, right? Meaning 4-week T-bills. So you can set it in automatic mode. That means you don't need to go and do it manually every time. So it can automatically roll over to the next one, meaning the first one expires, right? It will automatically can buy the next auction in the next auction. So that way you can just forget about it till you see that, oh, interest rates are going down. I just want to move it out from the treasury direct. Then you can just cancel that automatic investments, and then you can move the money back to your the bank account.
Okay. So the next question is, for T-bills, will the interest rate change by any means once we buy for 17 weeks T-bills?
No, it does not. So the way it works is, as I mentioned in my chat, right? So you're actually, when you buy at that time itself, you're actually getting that discount. So if the value is $100, right? I took an example of 52-week because I don't need to do the calculations for a lesser number of weeks, right? Because the interest rates are annual based, right? So if I say 5% interest, so that means when you buy at the time of buying, like you'll see that only $95 is taken from your account when you link your account, right? And on the maturity, like after 1 year, if it's a 52-week one, right? You're going to get paid $100. So it doesn't change with the T-bills. Like whatever at the time of auction, that's pretty much set for that period. So in this case, if you're buying for, what are the rates that we're looking at? So 52-week example, right? So there's a 4.6%. So that means you're going to get locked for 4 meaning at the time of buying, you're only paying $95.40. And at the end of the 52-week period, you're going to get paid $100.
Yeah. Okay, sir. Thank you. So the next question is again with respect to limits, I believe. Is T-bills plus I-bonds together 10K is the limit?
No, they're completely independent. T-bills you can buy. There is no such limit for the T-bills, as far as I know. But only for I-bonds. So you can go and buy your I-bonds 10K per SSN, right? That's completely independent security. And the T-bonds, you can just keep, T-bills, you can just keep buying.
Got it. Okay. The question is, any idea on Vanguard VMFXX?
I have no idea. So what is the symbol again?
VMF X as in Xerox, X as in Xerox.
Yeah. Yeah, so it's a money market fund, right? So it's a similar to money market account. So under the covers, they actually invest in the T-bills, right? So you can see that right now it's saying 4.87 yield. So it keeps on changing. So you can actually even go to their Vanguard site. You can check what kind of instruments they actually buy. It's only like its compound yield is 4.88 now. So yeah, I don't have much idea, but yeah, it's a money market. So under the covers, they are investing in pretty much you can see that US government securities. So which would be T-bills, treasury notes, treasury bonds. They might be investing in multiple expiries, like short-term, long-term. I'm sure their brochure will explain how they're doing it.
Okay. So the next question is, I-series bond can we buy per calendar year, or if I bought in about 2021, can I buy now?
Yeah, so every calendar year, it's 10K you can put in per SSN. So that means if you bought it in 2021, yeah, you can buy it. If you could have bought it in 2022, you can buy it again in 2023, right? The interest rates are going to get adjusted every 6 months. That means So when you say, for example, if you buy today, so you're going to get this interest rate, right? 6.89. But remember, this is going to get reset from May 1st. They're going to publish the new rates pretty soon. So which means you're not going to continue to get 6.89%. Like from May 1st, whatever is the new rate is that's the rate you're going to get. That whatever you invested, say 10,000, right? So from now till that, it's going to 6.9. After that, whatever is a reset, it might go up or go down. Because as I said, I invested last year, which was 9 point something. And then it got reset in November to 6.8. And so now I'm only getting 6.89, right? So in May 1st, who knows? It might, because given that it's cooling down, I'm guessing it's going to go down to maybe 6.1, 6.2, or 5.9, something like that.
Okay. So I think next question we have is, I have 10K in my bank account, who is paying like 0.1% interest. I believe I don't need to take out that money in near term. Would LI saving be a better option, or would T-bill be a better option?
So I'm not a financial advisor, but again, my take would, it all depends on, so Ally is paying 3.5%, right? The treasury bill is paying, like if you buy the 52-week one, you're assuming like you absolutely don't need that money, you're getting close to 4.6%, right? There is 1 point difference, meaning it's on a 10,000, it's $100 difference, right? Little more than $100. So yeah, if you want to take advantage of that, yeah, I would put it, but it's little illiquid, right? So you bought it, you had to just hold on to that for 1 year.
Yeah, right. So yeah, again, like Srini presented, or even this session, we are trying to learn new thing. Definitely, I learned something new where my money could do better, right? Without this session, I may not even paid attention. So again, it's personal choice. What are best options for us? It's just the information, what options we have, but not, hey, go do this, or we recommend doing this.
Right. So again, so to that question, if I were him, I would do, yeah, T-bill, but I'll just do 4-week one recursively, so that at any given point of time, I'm only logged for 4 week. But the risk with the 4-week one is, if the interest rates go down, right, in the next 3-4 months, then I'm going to get less interest. But anyway, if you are in the Ally Bank interest rates are also going to go down if the interest rates go down, right? So you'll have the same interest rate risk, whether you're doing the 4-week or the Ally Bank. But with the 1 year, you're guaranteed to have that 4.6% over the full 1 year.
Okay, got it. So the next question we have, once we purchase the T-bill, let's say for 17 weeks, can we withdraw the amount before 17 weeks?
I don't think so. From the Treasury Direct, I don't think so. I can get back to that on that, because I only started doing it this year, actually, T-bills. So we'll have to look into that.
Got it. CDs are same as I-bonds, unless you know what CDs mean here. Maybe I'll add.
Yeah, so I didn't get into the CDs. I usually don't do CDs, right? Yeah, so for example, if you go to Ally, so they offer CDs here, you can see that. So they pretty much say, okay, if it's a 12-month, for example, it's a good example, right? CDs, they pretty much do the same thing, right? So you can see that it's a 12-month is 4.50. And we saw that the T-bill on the Treasury Direct was giving like 4.65 or something. Last week, it was close to 5, actually, more than 5, actually. So it kind of, all these rates tie up to those T-bills pretty much. It's ease of doing some of the like selling and buying makes easy on this bank side with some additional penalty. With the Treasury Direct, it may not be. So that's the thing that you need to think about. You absolutely, like, I just want to keep it there and forget, right? Treasury Direct. Otherwise, you can go to the banks or brokerages where you can trade just like any other trading instrument.
Got it. So the next question I have is maybe something is missing here, but let me read out. If I bought I series in October 2021,
Mhm.
can buy now? Maybe that is, can we buy now? That is less than 1 year gap.
Yeah, it's a calendar year actually. So if you bought in 2022 October, right? Yeah, I know it's less than 1 year, but yeah, you can go ahead and buy it again now. Yeah, it's per
Okay,
calendar year. It's 10K.
got it. If liquidity is important, money market funds better, correct? That's the
Yeah,
question.
money market funds or money market accounts. Yes. Mhm.
Okay, got it. So so for the earlier we had a question about 10K bank account putting with the 0.1% interest. The feedback from the question member is excellent inputs and perspective. I would want to explore more and weigh in your thoughts. Thank you for helping us today. Uh,
No,
um,
thank you. It's just again, I'm not an expert. These are the things that I've been just started to do, like given the interest rates are high because I had some cash just sitting there. Um, so why not take advantage, right? Even if we can make like $1,000, $2,000, we can use it for other things. You know, everybody, most of us have families, so we go on vacation. So hopefully it helps, right?
right. Yes, I as Rini, many times, of course, although you're little inactive in Telegrams, I keep sharing your thoughts, and always he says is, you take advantage in bits with less risk, all that, right? Everybody's perspective how they handle money is different, but I see your point. Yes, 1000, why should I try? No, no, there is a chance, let's take it.
Because think of it like this, right? If you are not taking that 1,000, some bank guy is taking it.
Exactly. Yeah,
It's
definitely
not
makes
like I've been doing this all along in my life. It's just something I'm starting to do more and more last few years. I guess as you get old, you try to do more of these kind of things. Otherwise, I would just, okay, it's only 500,000, or even I don't even think about it most of the time. So just sharing some of the things I've been doing. So
right. Yeah, another feedback, thank you so much for doing these sessions as a team, and of course to Srini, that's another one. The next question we have is, where can we open money market accounts? Are these with banks like Fidelity, Charles Schwab, Vanguard? Is the answer it is given, but if you have any comment on that, that would be great.
Yeah, so money market account, some of the brokerages actually, like if you're into trading, some of the brokerages, they have the money market accounts tied to their things. So I've seen it in the past with like TD Ameritrade. I think Charles Schwab has it, and you can even automatically set it up so that they'll sweep the balances from your brokerage accounts to money market accounts. Or I have it on Ally as well. I have it in my Ameritrade one as well, but I have it in Ally as well. So if you go to here checking and money market, um, so you can see there's a 4% interest rate here. So you can even open with Ally Bank, and some of the other banks do offer as well. So check with your bank.
Got it. Thank you, Srini. I think with that, we don't have any further questions. But as said, if anyone wants to share any other ideas, let's give a couple minutes there and see. If not, I think unless Srini has any other points to share, I think for the objective of the session planned is achieved with this.
All right.
Yeah.
Yeah, thank you guys. Thank you for joining. It's again, I'm not like a financial advisor or an expert in this area. So feedback is always welcome. And if you guys have other ideas, let's share as a team, and we can all grow together.
Yeah. So the floor is open for everybody to talk. Of course, it doesn't overlap now, I believe. If anything, any comment or any question, feel free. We can brainstorm for a few more minutes, as it is still within under our planned time. I see Sudarshan want to talk.
This is one question. Like these money market deposits are different from my bonds. How it is different from those two?
The question is not clear, Kishore. The audio.
Money market deposit. Is it different from iPhones, buying iPhones? What is the difference between those two?
Difference between money market accounts and
I-bonds, I believe.
Yeah, iPhones.
Yeah, so it's completely different in the sense money market account is managed by third parties like banks or brokerages, right? Under the covers, they will invest for you, so you don't need to worry about it. They manage all the things for you and they'll try to optimize. So you're directly putting the money there, right? So buying the I bonds, so usually money market funds, they don't invest into I bonds. They invest into the treasury bills, treasury notes, and things like that, right? Which are tied to the current interest, just the regular, the interest that goes on with the bonds and the treasury bills, right? The I bonds are more inflation related, like based on the inflation, these things go up and down. The interest rate that you get on the I bonds.
Is that money market the interest rate is fixed 4%, whatever you shown, or
No, it keeps varying. So for example, for I bonds, right, the interest rate is pretty much fixed for that 6-month period. I mean, every 6-month period, it's going to reset. So it's going to be there for that 6-month period, right? But with the money markets, it can even fluctuate daily. Usually, weekly at least it fluctuates based on these existing auction rates and how these banks actually roll their underlying bonds and T-bills. So you'll get it keeps on varying. But it will be close to the T-bill rates, T-bills and treasury notes rates.
Okay.
Yeah, I think with that, thank you, Srini, for conducting this. Let me brainstorm myself how I can make
So just I guess like everybody knows that Google is our friend. So so hopefully at least you guys have a couple of new things. So go research, and if that fits your investment style and the risk patterns, then you should look into those options.
Yeah, planting the seeds is important, Srini, which is what you did today, at least for me, and of course to many. So we'll take it forward.
All right. Yeah,
Having said,
you guys have a wonderful rest of the weekend. Talk to you later.
Thank you all. Thank you, Srini. Everybody have a good weekend.
Thank you.